Welcome to the Real Estate Investor Podcast. I'm your host, Gary Lipsky of Break of Day Capital. I talk to leading experts to discuss a wide range of subjects to educate investors on best-in-class practices to build legacy wealth and positively impact communities. Let's jump in. Welcome back to the Real Estate Investor Podcast. If you've been listening to this show for a while, you know we focus on going a mile deep instead of a mile wide. That's exactly why we're buying again in Tucson, our 12th deal in the market. Our latest acquisition, Icon on Broadway, is a 300-unit multifamily community purchased well below replacement costs with day one cash flow and conservative underwriting. We're projecting a 16 to 18% IRR with significant bonus depreciation in year one. If you're an accredited investor and want to learn more, you can access the deal room at breakofdaycapital.com.
Financial advisor Bromley Palamountain of Northwestern Mutual empowers people to make their financial dreams a reality through purpose, clarity, and design. Be sure to check out his links in the show notes.
Today's a solo pod. I wanted to highlight the InvestSmart Summit, which we just finished, and the deal we just closed called Icon on Broadway. I'll start with the summit. It's the second one we've done. I'm really proud of it because it's a no-pitch virtual summit that provides a ton of great content with some amazing speakers. It's not just multifamily, but investing in general, what to look out for, where are the opportunities right now. And we also talked tax strategies so that you don't have to pay more taxes than you need to, and wellness, because without your health, you're not living a rich life, right? It was also great because of the questions investors had, the level of engagement, the thoughtfulness. It was clear people are really trying to understand how to navigate this market, not the one from a few years ago. So today I want to talk through some of the biggest takeaways from the summit. This isn't a recap, but the insights that I think actually matter, the ones that can change how you think about investing going forward. Let's start with Kathy Fettke, who really set the tone for the entire event. One of the most important things she said was, this isn't a collapse, it's a reset. And that distinction matters because a lot of investors are still trying to figure out, is this 2008 again? Is the market broken? And the answer is not really. What we're seeing is a repricing. This is really more on the real estate side. There's higher interest rates, affordability constraints, supply dynamics. All of that is forcing the market back to fundamentals. And she made another point that I think is critical. We're not in one market anymore. We're in multiple markets. Some markets are correcting hard, others are stabilizing, some are still growing. And if you treat real estate like one big uniform asset class, that's where mistakes happen. The opportunity today is being selective, not just being in the market. We also had a great panel with Dean Indot and Bronson Hill focused on how to think about where to invest right now. And one thing they made very clear is there's never a perfect time to invest, only better informed decisions. A lot of investors are still waiting for the market to bottom, rates to drop, uncertainty to go away. By the time all of that happens, the opportunity is usually already behind you. They also touch on something that doesn't get talked about enough. The biggest risk right now might actually be staying on the sidelines too long, because while you're waiting, inflation is still working against you. And another point that really ties everything together, you have to zoom out before you can zoom in. Before you evaluate a deal, you need to understand the bigger picture, where capital is flowing, what markets are doing, what fundamentals are driving demand. And ultimately, their message was simple. Follow the fundamentals, not the headlines, because the headlines are designed to get attention, not to help you make good investment decisions. Then we had Amanda Hahn and Matt McFarland. And honestly, this session is one that I think a lot of investors underestimate because taxes aren't the most exciting topic, but they might be the one of the most important ones. And one of the biggest takeaways was this. Tax strategy isn't something you figure out after the fact. It's something you plan before the year even starts. And that's a massive mindset shift. Most people think I'll deal with taxes when I file, but by then, most of your opportunities are already gone. They also made a really powerful point. High earners don't pay less taxes because of loopholes. They plan better. It's about awareness and timing. And when you start thinking about investing, not just in terms of returns, but in terms of after-tax returns, it really changes how you evaluate everything. Then I talked about the real estate reset. In March 2000, 2022, the Fed began raising rates, 11, in fact, that brought rates up over 5 points. Rates were higher and longer than anyone could have guessed. Real estate asset classes were affected differently. Office was hit hard, particularly because of COVID, but has since stabilized a bit. Multifamily took a bit hit, also due to oversupply and a cutback on rents. Retail, which was supposed to die, but has stabilized a bit, and then you've got senior housing, self storage, and industrial. All have varying degrees of issues and positive outlooks. The bottom line is you have to know the market because it's different and it has nuances everywhere you look. But there is opportunity as well. Next was Matt King. And this was one of my favorite sessions because it really gets into how investors think. He said something that I think a lot of people needed to hear. If you don't have a thesis, an investing thesis, you're just reacting to deals. And that's exactly where most investors are doing wrong. They're looking at deals one at a time, trying to decide, is this good? Is this bad? Instead of stepping back and asking, what do I actually believe about this market? He also emphasized your thesis should tell you what not to invest in. And that's where clarity comes from. Because a strong thesis isn't about finding more opportunities, it's about eliminating them as well. And he made another point that really ties into today's environment. You don't get paid for what already happened, you get paid for being right about what happens next. So if you're basing decisions purely on past performance, you're already behind. Then we had Jay Scott, who brought a very grounded and very relevant perspective on what's actually driving the market right now. One of the biggest themes he talked about was the role of the Fed in interest rates. He emphasized that a lot of what we're seeing isn't random, it's directly tied to monetary policy. The Fed spent years keeping rates artificially low, which drove asset prices higher across the board, and now we're seeing the reverse. One key takeaway was the Fed doesn't control long-term rates directly, but they heavily influence them through expectations. So even when the Fed pauses, that doesn't automatically mean rates drop. And that's where a lot of investors are getting it wrong. They're waiting for a return to the old environment instead of adjusting to the current one. He also made a really important point about inflation, and this is where it gets interesting. AI is likely to be one of the most deflationary forces we've ever seen. Think about that for a second. AI has the potential to reduce labor costs, increase efficiency, lower the cost of goods and services, and over time, that creates downward pressure on prices, which means the long term inflation story may not be as simple as people think. If there's one theme that ties all of this together, is this market is more complex, but it also is more honest. It rewards discipline, it rewards clarity, and it rewards investors who are actually thinking about risk, not just return. And that's what the summit was about. Helping investors move from reacting to making intentional, informed decisions. If you missed the summit and want to access the full sessions, we'll include a link in the show notes where you can get all the recordings on demand. All right, let's talk about Icon on Broadway. This is one we're really excited about. This was actually an off-market opportunity, which already puts us in a strong position from a basis standpoint. What made it even more compelling is the location. It's about a mile from one of our existing properties and near several others that we own. In total, this is one of 9 properties that we own in Tucson, where we have 1,600 units with investors. Our strategy has always been to go a mile deep, not a mile wide. And that concentration gives us a huge advantage. Thousands of real-time data points, strong vendor relationships, and real operational scale that operators just don't have. We first saw this deal back in November. We walked it during the day and came back to walk it at night to really understand the feel of the asset. And what stood out was that it was clean, well run, and had a solid tenant base. That's not always what you find. The location is another big plus. It's on a busy corridor directly across from major retail like Home Depot, Kohl's, PetSmart, Ashley Furniture, and adjacent to medical offices. So you've got strong fundamentals supporting long-term demand. Now, it's not a heavy value add deal, and that's actually part of what we liked about it. It's been owned for over 5 years, so there's some deferred maintenance, which we've already accounted for in our basis. But more importantly, we're not relying on big aggressive rent growth to make the deal work. We underwrote it for 0% rent growth the first year, even though we've seen projections for 3% or even more. In today's environment, that's critical. Instead of we're focused on operational improvements and small, consistent upgrades, things like enhancing landscaping, refreshing paint, improving the parking lot, and addressing key infrastructure like boilers and water lines. None of these are flashy on their own, but together they create a meaningful value over time. When we evaluate deals, we always ask, where are the risks and how do we mitigate them? For us, a big part of that mitigation comes from scale in Tucson. With 1,600 units, we're not guessing. We have real data, established teams, and long-standing relationships with vendors, brokers, and the community. And zooming out, Tucson continues to check a lot of boxes for us. Favorable property taxes, manageable insurance costs, strong job and population growth, increasing job diversity, and a landlord-friendly environment. Those fundamentals create long-term tailwinds. At the end of the day, this isn't a home run swing type deal, and that's exactly the point. It's a well-located, well-operated asset that we're buying at a strong basis in a market we know extremely well, with a business plan focused on execution, not speculation. It really takes a village to get a deal like this across the finish line, from the lending team, brokers, attorneys, to investor relations, acquisitions, operations, our property management team, and of course, our investors. There are a lot of moving pieces and a lot of people behind the scenes making it happen. I'm incredibly grateful to everyone who helped get us here. And the reality is, closing isn't the finish line, it's the starting point. Now the real work begins, executing the business plan, operating at a high level, and making hundreds of smart, small decisions over time to maximize the asset. It's a long-term process. There will be highs, there will be challenges, but that's what this business is. We're not just buying a property, we're operating a business. And what excites me most about this opportunity ahead to create a high quality community for our residents and to deliver strong, consistent results for our investors. That's it for today. Thanks for listening. And if you like this episode, don't forget to like, subscribe, and leave a comment. And if you'd like to learn more about this project or any of our other projects, head to our website at breakofdaycapital.com to learn more. I'll see you on the next episode of the Real Estate Investor Podcast. To all of our listeners, thanks for joining us. And if you like this episode, please head over to iTunes or Stitcher and like, subscribe, and leave a review, as it will help us reach more people. And if you'd like to learn more about what we do at Break of Day Capital, head over to our website at breakofdaycapital.com and sign up for our newsletter and fill out our investor application. We'll talk to you next week.